Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and with me joining in somebody very, very special, Mr. Abhik Barua joins in. He's the Chief Economist at HDFC Bank. Welcome, sir, and thank you so much for taking the time out to speak with us. Well, the budget is just done and dusted. First thoughts and key takeaways from you as an economist per se. How do you rate the budget?
Well, I'd sort of rate it quite high because one of the things that it did, given that it was it's a sort of pre-election year, that it avoided any overt populism, which I think is a very major step. In terms of its projections, I think they are realistic, and it could produce an upside surprise in terms of revenues and so forth. I think the focus on investment growth and capital allocation is welcome. And I think it's the quality of spending is good, not just in the sense of just prioritizing investments over revenue expenditures, but also in terms of looking at some sectors like the green sector, inclusive growth, and so forth. So overall, I think it's a budget I'd be pleased with.
Okay. As an economist, how do you look at some of the numbers that were brought about in terms of the growth, 6.5%, 10.5% as a nominal GDP growth, and the glide path that the government has given on the fiscal consolidation path?
I think the numbers are credible and they are a little conservative. So the happy situation would be one in which there is a slightly higher growth, both in real and nominal terms, and that should bring in more revenues. I think the revenue buoyancy numbers are very encouraging. So we seem to be getting to a point where every rupee of GDP is getting us more tax revenue. So these are positives. I think the glide path makes sense, and it's also imperative given the fact that we have a very high public debt to GDP ratio, and given the way we are going, where we are sort of jettisoning this business of overspending on some of the things that were considered, sacrosanct in election times or even otherwise politically. We're sort of changing the political narrative around budgeting and budget allocations. I think we should be able to sort of get to the glide path, but there is a lot of uncertainty ahead, given the global situation particularly.
Absolutely. So you did mention about the macroeconomic uncertainties. To that effect, does the budget do enough to move the needle on growth?
I think it, to the extent it does, because what it does is recognizes the fact that in a year fraught with this kind of uncertainty, the private sector is not going to do the heavy lifting. So the government's got to do the heavy lifting, and it sort of put its money where its where its mouth or its policy intent is. So I think that yes, it does, but you can't completely insulate yourself from a global downturn, and so to that extent, I think the numbers assumed, the GDP numbers particularly, reflect that. So we are, considering a slowdown, but not a large one, and hopefully the government's efforts will pay off in insulating the economy.
There is a slight concern that some of the analysts have been having on the kind of inflationary impact that the budget could have. Do you also see that the budget is inflationary in nature?
I don't think it is inflationary in nature, in the sense that how does an economist look at an inflationary budget? If you sort of went overboard on expanding your fiscal deficit, that would be inflationary. That's not happening. Well, some of the spending, might just find its way into higher prices, but then there are supply side effects too. I don't think it's too much of an inflationary budget, but broadly, this is not to deny the fact that inflation remains an issue which is sort of alive and kicking, and we need to sort of always be on our guard, particularly the RBI, in tackling it. But I think in terms of adding to inflation pressures, I don't think the budget does it too much.
So how should the RBI really read into the budget announcements right there?
Well, heave a sigh of relief that this didn't sort of go overboard on spending, and that a lot of the spending is on capacity creation, which in the long term is very positive for inflation, and but sort of stick to its guns as far as its focus on inflation and now on core inflation, which is sort of net of food and the other volatile items. It should sort of continue to do that. A very populist, expansionary budget would have had, would have given the governor more sleepless nights than he has now. So yeah.
So, what do you really expect the RBI to do? The MPC has begun its 3-day meeting right there. Do you expect a pause, or should the RBI really go for a pause to aid growth?
No, I think the RBI should, perhaps hike once more and then go in for a prolonged pause. It's supporting growth in many other ways. The interest rate is not the only route through which it sort of helps growth. There's a credit channel, there's a liquidity channel, and given the overall concerns and the pressures of inflation, it has aided growth to the extent it can. So I think it struck a very fine balance.
So, what is the number that you're working with? What percentage of rate hike are we looking at?
25 basis points in the next, and then a sort of a prolonged pause, but with the possibility of another hike if things kind of turn a little, wild in terms of commodity prices and so forth. Let's not forget that China has opened up and it's going to be really back on its feet in a couple of months once the COVID thing has finally diminished.
Absolutely. How long before we can look at a rate reversal, rate cut cycle beginning?
You are asking for too much at this stage, I think. Certainly not until the end of this year, and then we can sort of look at the possibility of rate cut.
So one of the biggest talking points of this budget has been the announcements of the changes in the new tax regime. How are you looking at this step, right from the common man to the overall macroeconomy? What does this change? How does this change things?
Well, I think it is for the common man, for a taxpayer. It has always. I think it helps to move to an easier tax regime where you don't have to run to a chartered accountant, or call him every other minute to figure out where you should be putting your money and so forth. So I think in general, I'm sorry, I'm being a little frivolous, but in general, I think cleaner and more transparent tax regimes are good for the common man. Having said that, we've had a culture of exemptions and so forth. It's good to it'll be difficult to kind of move away from that mindset where you just put that little bit of money in some bond that gives you some tax savings and so forth.
Right, because I am asking you this because a lot of critics have pointed out that this will affect the financialization of savings from the normal households in India. Do you also believe there is a risk?
I think there is a short-term risk, yes. I think we've had a problem with financial savings of households. This could create further problems. But don't forget that we've not sort of moved lock, stock and barrel to the new regime. The old regime is very much there, especially for salaried employees who get exemptions on other things like rent and so forth. So there is quite a large part of the tax base which is still in the old regime and which would support savings, and the tax base is also increasing. So that's good news.
All right. Well, thank you so much, Mr. Baru. It's been great speaking with you, as is always, to have you with us on Business Today TV. Thank you.